The Bank of Japan starting to pare back some of its pandemic-related support, but it's extending a program to help small and medium-sized companies. It's keeping its ultra-low interest rates unchanged. Well, the short-term interest rate stays at minus 0.1%, and the BOJ is holding the yield on the 10-year Japanese government bond at zero. The central bank is also slowing purchases of corporate bonds and commercial paper to pre-pandemic levels. It says that reflects more favorable funding conditions for larger companies. And for smaller businesses, it's extending part of its special aid by 6 months to September. Now, the BOJ's decision caps a busy week for Asian central banks, many at a critical juncture, torn between taming inflation and easing back on stimulus at a time when economic recoveries are threatened by the Omicron variant. Rajiv Biswas, chief economist at APEC at IHS Markit, tells us the Bank of Japan is taking cautious steps to dial back the stimulus measures.
The BOJ, in its decision, has continued to provide support to small to medium enterprises with their special financing scheme. They decided to extend that support for another 6 months to September next year. But they did decide to withdraw some of the supportive measures on the QE side. So some of the special support measures that had been added on as a result of the pandemic are going to be withdrawn as of April 2022. So gradual measures to try to restore the QE policies back to where they were before the pandemic. So I think these are very cautious steps. We are looking for much better growth next year in the Japanese economy. We're already seeing quite a rebound happening after they lifted their state of emergency measures in the fourth quarter. And then looking towards the outlook for 2022, we expect that both manufacturing and services should rebound, again, subject to the Omicron variant not having a significant impact on economic activity.